Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk 780 KOH. It is a pleasure to be with you. It is a pleasure that it's TGIF, and a great pleasure to be with my partner, Jason Gaunt. How are you, my friend? Happy Friday.
It is Friday. I don't know if I'm going to give you happy today, but yes, happy China tariff. I'm really mad at you because you're mean to me. I'm going to tweet something and make the market go down a lot Friday.
Yes. Okay. In other words, you just summarize what happened today in the normal session and, of course, what's happening right now as we speak in the after-hours session.
Yes.
Yes, exactly. Well, folks, we're going to get right to it because there is a ton of information going on that would potentially impact your portfolios, and we want to bring you up to date, let you kind of calm down, get an understanding of what's happening, get you ready for Monday, unless something changes over the weekend. But right now, things looking a little bit rough. Mr. Gaunt, where are we at in the futures in the after-hours right now?
I look at
the SPY.
The spiders, the SPY there, down 0.7% post the close. So the market was down 2.7% today and down another 65, 70 bips after the close. It's the bunny slipper traders, but it's not based on futures. It's just based on people buying and selling spiders after the close.
Exactly. Okay, folks, so here's what's going on. I'm going to go back to a few hours ago this morning, actually. So out of the blue, the president posted on True Social that he's going to threaten to raise the tariffs against China and impose export controls. He also said, quote, "There's no reason for me to meet with Chinese President Xi after he has imposed new restrictions on the rare earth materials." What did the market do? We were up a couple hundred points on the Dow, and immediately we were down about 300 points. And that's how we continued to trade throughout the day, lower and lower and lower. So the market reaction, it was a sell-off. But as an investor, of course, what the heck do you do now? Well, that's what we're here for. We're going to help you make that decision today, fill you with the facts of what's going on, give you our opinion, our 50 plus years of portfolio management experience, and let you know exactly things that are going on. If your advisor's not telling you all this stuff, you know what? Give us a call on Monday. We'd love to talk. All right, Mr. Gaunt, do you want to tackle the regular session and I'll tackle what happened after the close with the presidents? Or do we just want to mix it all together?
I think it's a big bowl of oatmeal, to be honest with you today. I don't think the University of Michigan sentiment reading that was pretty good. 55 was much in terms of the cannon fodder of headlines. I think we're also in a place that you and I have talked about quite a bit over the last several weeks that the market is at a tentative spot. Like you get up to all-time highs, and guess what? You either go higher or you fall. Like we said before, Jason's always full of analogies, but up an escalator, down an elevator, right? That is a bull market. That is fine. This is okay. Again, I'm not of the opinion that this is the top and we're just going straight down from here. But what is the market pricing in? Again, we'll get into the details, but you needed the best case scenario for the market to go higher, right? It doesn't mean that it wouldn't happen, but you needed all the good things to continue to happen, earnings to be good, so on and so forth, a hugging and kissing between China and US and Gaza and Israel and all those things. Well, we got a curveball, right? And so people tend to shoot first and ask questions later. And that's why you see those high beta names that we've talked about as well. Keep a tight leash on them because they will move fast on you if things go the other way. And I just think that's a bit of what we got today, throwing into that the bond market is closed on Monday. So the market may be sans one of its rudders. So could be good or bad, but at least something to pay attention to. But overall, we got the news of the tariff commentary, or at least some of the angst around what China did with our rare earths, et cetera. And our market reacted pretty aggressively to the downside.
Okay. Let's go back 2 days ago. Okay. So actually, let's go back a couple of weeks. Because again, we're never on this show to pat ourselves on the back. We're here to tell you what we see each and every day. Are we right all the time? Absolutely not. But we told you 2 weeks ago, there's something going on. Remember that term that Jason and I like to use, the spidey senses? And I used that term on the show, if you remember, Jason. And I said, my spidey senses
and off the show,
are telling me
off the show, in fact, too.
Well, yeah.
You've been kind of that ilk that the big moves lower sooner rather than later. So yeah, kudos.
Yeah, thank you. Well, you're right there with me. We started to see some underpinnings going on, as we discussed so many times on this program. Let's go back a couple weeks, and then we'll build up to where we sit right now, Friday, October 10th, 3:12 p.m. Jason and I have been concerned. We've been telling you on the show. We can't tell you exactly what we did with some of our clients, but As I've told you, we just don't talk, we take action, right? So we took some defensive action a few weeks ago, thank God. We had AI valuations really begin to come to the surface. Kudos to Jason in regards to private equity, a lot of money being lent, a lot of money going to AI related companies, names, etc., but also in other areas, right? We had a massive bankruptcy, two of them this month, in one in the automotive parts industry and another in the auto lending industry. Well, I'll let Jason explain that one if we get time later in the program. But there's a bunch of money, like well over $1 billion lent in the auto parts bankruptcy by various firms, mainly in the private credit space, right? As we've always tried to educate all of you, you've got to remember a couple things, especially if you're new to the market. Number one, Wall Street never remembers previous mistakes, right? You think they would have learned that you give a bunch of money to one area or to one lender, and like this auto parts lender, they're now coming back and going, what we kind of held as collateral, when we lent this money, well, they did it about two or three other times to other banks. Geez, how many times have we heard that story in our career, Jason? Yeah, that's what companies do, right? You give them a bunch of money, and in many cases, unfortunately, they didn't tell the truth. So that's going to surface. But the bottom line is a lot of money, like I said, at least all we know at this point, close to $1 billion by various banks, lent to the company. They're now bankrupt. Now the investigation is beginning. So now you've got these companies going, oh, we got a problem. We've used an analogy for years on this program called the cockroach theory. Where there's one, there's others. Where there's one bad news, there can be many others lurking, right? And we think that that could be one of the underlying problems also in this market right now, that with these two bankruptcies, this shows now that credit markets, credit lenders are exposed, and exposed in a big way. So that's probably a subject for another show because other things, but that's just one of the ingredients. So we've been worried about that. We've been worried about, again, the AI valuation, the circular accounting that we've been talking about, and another number of other factors, but those are the three primary ones. So we fast forward to today. Everything's fine, right? Looking at my notes right now, Jason, I mean, heck, it was a nice quiet day today. We were up, 50, 60 points right before the open on the Dow futures. NASDAQs and S&Ps were up a few points. Looked like a nice quiet day. We open up. You and I were chatting at, I don't know, 6:30 right on there, and said, it's the same thing. Market, we've had this pattern happen. Market's quiet in pre-market. Opening bell rings, shoots up, then we sell off, right? It's happened almost every day this week. Fortunately, with the president, when he sent out this Truth Social post, everyone went, to your point, shoot now, ask questions later, right? Now we got problems with China. And so not only with this issue, but then he threatened again, he's going to do more tariffs, which he did in the after hours session. So he kept to his word, and this is what made the market sell off significantly. So I'm going to just tell you right now, before I go any further, what the market did today. So we lost 879 points on the Dow, a 1.9% loss to 45,479. Can't remember the last time we've had to say this one, Jason. 820 point loss on the NASDAQ. I mean, that's severe. That's a 3.56% loss. Closed at 22,204. And the S&P down 183 points, 2.71% to 6,552. Okay. So there was the damage. Now, that's what we've been talking about the last couple of weeks. The other issue I want to throw in there, this rare earth situation. Rare earth metals. And again, we could do hours on this whole subject, but bottom line, remember during COVID, one thing this country learned is we rely upon foreign governments too much and foreign companies for semiconductors. Well, then it began to surface, hey, you know what? We're kind of relying upon China. Oops, by the way, they produce, 70, 80%, depending upon whose numbers you look at, the rare earths. These are rare earth minerals that are used in things like magnets. You may think, remember Jason as a kid? I don't know about you. I had a big magnet, man. I love
They're
playing with that
fun.
thing.
Yeah.
Yeah. But nowadays, of course, magnets are used in everything from automobiles, electric vehicles, fighter aircraft. I mean, things that we need. But China's got the key to the door, right? And this started to surface not long ago when we started going through the tariff situation back in April, and all this rose, and everyone went, oh, whoa, we didn't realize that China, produced the bulk of the rare earths in the world. And that was one of their negotiating tactics back to Trump. Okay. So now you refresh there. Now let's fast forward very quick before we go to break to 2 days ago. President Xi of China said, hey, you know what? You guys aren't being too fun and cooperating too much on the tariffs, all the other tariffs. So here's what I'm going to do. I'm going to charge 0.1% for any company in China that exports rare minerals to the US and essentially the rest of the world. But we have to approve every application. We all know.
It's like that NVIDIA thing, right? With all the
Yeah, right. I don't think that's going to happen. So that's been brewing under the surface. If you've caught my stock updates, I've been talking a lot, and we did yesterday on the show with the boys. The rare earth stocks, right? They've been building up. They've been building up. They've been building up. Well, this was the reason why, because what happened 2 days ago. Today, I think the president woke up and went, you know what, Mr. Xi, you don't owe, you're not going to pull the strings on this. We've got our own things that we're going to do to you. And that's what he said today. So when we come back, we're going to start with what the president sent out in True Social this morning. You saw the market reaction that I just heard, or you just heard the market reaction. Now we'll talk about what's going on in the after hours, what he said then, because it was kind of a two-step process today, right, Jay?
really was. It fed and fed throughout the session. It almost felt as if someone had a sort of vendetta to get this market lower, and hopefully that's the case, but we'll see.
You got it. You got it. All right, we got a lot of things to talk about. Let's turn it over to the wonderful Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. Once again, we had a tough day today. We're explaining the reasons behind it. 9 decline on the Dow, 1.9%. NASDAQ down 820 points, 3.58%, and the S&P lower by 183 or 2.71%. And again, we're continuing to see further pressure in the after-hours side of things. All right, so we built up until this morning. Okay, so I saved what the president said that started this market sell-off. I saved the president's comments. He said China is, quote, becoming very hostile. He mentioned that disputes with rare earth minerals, says there's now, quote, no reason to meet with Chinese President Xi at APEC, which is a meeting that was scheduled at the end of this month, by the way. Excuse me. He said one of the policies that we're calculating at this moment is a massive increase of tariffs on Chinese products coming into the United States of America. There are many other countermeasures. But you got to hand it to the man, Jay. He kept his word of what he said earlier this morning in this social post, because that is exactly what happened in the after hours that we'll get to in just a moment. So what's going on? So again, let's recap what I said before we went to break, what Jason said, right? Started a couple days ago with these rare earth metal situations, right? We need those for magnets and again, whole another reason. But in a day, just again, talking about a big market sell-off, here's some of those rare earth names, and they're in different forms and fashions, different minerals and things, but just to kind of give you an idea. Now, one in our backyard that you've heard us talk a lot about, we're not recommending these or anything else, is the Lithium Americas. And this includes a little bit of after hours action when I tell you these. That one actually sold off today, down 8.71%. Ramco Resources up 2.5% today. MP Materials up 7.62. Trilogy Metals, though, down 8.86. U.S. Rare Earth up 11.91. Energy Fuels up 3.65. So in a day where the market's down, between almost 2 to almost 3%, there it is. And that's why those stocks shot up today, is because of, again, this rare earth situation where the President Xi a couple of days ago said, basically, just read between the lines, we're not going to let anybody else have this. And that's his bargaining point. That then infuriated Trump today. And hence what happened with the president making that Truth Social post today, and kind of brought us to this point of the market close and then after hours. You want me to tackle the president's 100% tariffs after hours, Jay?
Please, no, go right ahead. You're
all right. I'm on a roll.
Swimming around, yeah.
All right. So not long after the stock market closed today, we find out from the White House the following. The president said he is going to hit China with a 100% additional tariff and impose new export controls on critical software products after Beijing placed new restrictions on the export of rare earth minerals. Okay, critical software, critical rare earth. See how it's tit for tat? Now listen to the details, folks. The new 100% tariff, and oh yeah, by the way, that's on top of other tariffs that I'll tell you the total now new tariff with China. The new measure is going to take effect just in a few weeks, November the 1st. Export control would affect, quote, any and all critical software, he wrote. The measures could take effect even sooner, he added, depending upon any further actions or changes taken by China. Now, Jay, let's kind of stop with that. This next little quote that he said. These measures could take effect even sooner. Jay, what do you think the odds are that sooner is going to be before November 1st?
Greater than 50%, I will give you.
Exactly. Exactly. Because we have seen when he gets upset with other countries, and especially when it comes to tariffs, which is his baby, he could wake up tomorrow morning. Again, we don't know. We're speculating. He could wake up tomorrow morning, or he may not go to bed till 2 o'clock tomorrow morning and send out a True Social post and go, you know what? I told you it was November 1st, but it's really going to become effective on Monday, the 13th, right? We've learned that. We've seen that happen in the past. Okay. So we got to keep that in mind as investors. Okay. So now back to what happened in the after hours. So now we have a new 100% tariff against China. Trump wrote also the following: "It is impossible to believe that China would have taken such an action, but they have. And the rest is history with a capital H." The average U.S. tariffs right now, as we sit before this new 100%, average U.S. tariffs, according to the Peterson Institute for International Economics, currently stand at 57%. So we take, remember, there's different tariff percentages for different products and so on and so forth. So average it all together, we're now looking right above 150% tariff, pretty much for anything coming in from China. Jay, what did Amazon do today?
It went lower, John. Amazon today, when all was said and done, stock was down about 5%.
There you go. There you go. There's your first warning shot. Watch what you have in your portfolio. Take it away, Jay. Why?
Apple was down 3.5%, right? There's sensitivities all over the place. You've got true sensitivities to import export, who's going to be hurt by tariffs. Like you mentioned, the sensitive folks, the Amazons, the Apples, you can almost rewind the playbook to April. And then high beta, right? People just de-risking their portfolios. It doesn't take a lot to move a high beta stock. These thinner names that people have bid up.
Explain what beta is real quick.
Just correlation to the stock market. So a higher beta name tends to, biotech, some of these speculative AI stocks, et cetera, they go up 3% on average when the market's up 1%. That would be a 3 beta stock, right? Whereas a consumer staple like a Clorox may be a 0.6 beta stock, meaning that when the market goes up 1%, Clorox goes up 1%. Well, guess what? Beta works on both sides. There's up and then there's down. So Clorox, staples, utilities, those types of things, low beta stocks tend to outperform on bad days. I guess what high beta stocks tend to do much worse on bad days. And that's a lot of what we saw here. And beta tends to really get expanded. They go down more than their normal up beta, like you've seen. I'm sure if you looked inside of your portfolio,
if I'm sitting out there listening to you right now and you explain
betas in your everything you got, you can go look in
so that's the point. Would this be a good time, Jason Gaunt, to maybe look at the beta of your holdings in your portfolio?
Yahoo Finance, Fidelity, you name it, any search, Google, you could literally go in your favorite chat GPT, Perplexity, AI machine and say, hey, what's the 3-year average beta to the S&P of all these names? Drop them in there, hit enter, and boom, you'll get your betas, and you can create beta adjusted exposure. That's what I do for our portfolios. I look at it all the time. Because remember, the betas are not, add them up and divide by total number of names. You have to look at how big each name is in terms of notional versus its beta. So if you've got $100 of one stock and 300 of another, those are 500. Right. You need to know that that $300 beta is basically 3x. So you can look at your portfolio and look at beta adjusted exposure. So you get a sense of how should my portfolio act on a day like this. And if it doesn't act like you think, something clearly is out of whack with what you're doing. And normally that's because of beta. You'll be like, whoa, I didn't realize I had so much beta inside of my account, like we've talked about before. It's hedged, it's diversified. Well, you probably have a lot of the same things, or you truly have a momentum tilt. You've got high beta across lots of names, even though they aren't tech. They could be energy, and et cetera. So just a little bit of a nerdy teach-in. Beta, go read about it. It's a simple way. There's lots of other ways we could look at correlation, but beta is one that I tend to look at quickly.
Summarize: a beta of 1 means your holding is going to move lock, stock, and barrel with the S&P, right?
On average, 1. Yep.
On average. Beta greater than 1 means you're, again, if it's 1.2, you're going to move
more than both up
more
and
than
down.
the S&P, and a beta of 0.7, you're going to move less, right? So you have to look at your personal risk tolerance. This is why I said, I think it was Wednesday or not. I think it was Monday, Jason. Maybe it was Wednesday when you and I said, now's a good time to start creating your defensive strategies, right? that's one thing you need to do, because betas, to Jason's point, will always be changing in your portfolio. Maybe when you bought your stock, it was a 0.7 beta, and things have gone crazy, and now it's a, whatever, 1.2, 1.3 beta. So that's why you got to keep up on that. Got to keep up. So there's the next lesson from today's action. Okay, when we come back, we're going to continue what has happened today, and what specifically this after hours announcement by the president. We're now looking at, again, a 150 plus tariff against China. So it's just having fun. And oh, by the way, government announced a bunch of massive layoffs today. And oh, by the way, what is this today? Day 10 of the government shutdown. So got a few headwinds. That's why you need us. We'll be right back. Let's turn over to Jack Saban, News Talk 780 KOH. Right now, traffic. Or not right now, but news, traffic, and weather. Hey, Jack. Welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy Friday to all of you. And hey, you know what Jason mentioned earlier? Do you want to kind of throw this out there so there's no confusion? Obviously, Monday is Columbus Day. The bond market will be closed. Many of you will have the day off. We will be here. The stock market is open that day. Once again, Jay, why don't they ever give us that day off?
No, no love. No
Every
love
year I say the same thing. Oh, goodness. Yeah. This would have been a great weekend to have a 3-day weekend to do a little cooling off period, right? After
Amen.
today's sell-off.
Yes.
It would have been a great weekend for that. All right, speaking of cooling off, we're helping you make sense of the rare earth market sell-off, as Jason and I have dubbed today's market sell-off. An 879 loss on the Dow, down 820 on the NASDAQ, and a decline of 183. Once again, to kind of give you a brief summary, it started weeks ago. A lot of chatter about the accounting practices with AI. A lot of chatter about the market being overvalued, the AI sector being overvalued. We warned you, watching this very, very closely. We fast forward to a couple days ago when President Xi said, guess what? We're going to impose this new 0.1% tariff, tax, whatever you want to call it, on any rare earths that are sent out of China. By the way, China, again, produces 70% of the world's rare earths. So they're not a little player. Trump kind of resonated on this, is my guess. And this morning he smacked the market across the face with a 2x4 and said, yeah, I don't think that's the way it's going to be. First thing I'm going to do is I'm going to cancel my meeting I was supposed to have with you at the end of this month. So yeah, we're not going to meet, right? So forget about that. Then he throws out on True Social that China is becoming very hostile. He mentions the dispute with the rare earth metals. He says there is now no reason to meet with President Xi. And one of the policies we're calculating at the moment is a massive increase of tariffs on Chinese products coming into the U.S. And there are many other countermeasures. Well, he was a man of his word today, because that's exactly what he did. Not long after the stock market closed this afternoon, the president said he's going to hit China with a 100% additional tariff and impose new export controls on critical software products after Beijing placed new restrictions on the export of rare earth metals or minerals. Now, remember, folks, again, we can do another show next week, Jason, if this is still an issue, on rare earth metals, where they use military. Jason, semiconductors. Are those kind of important right now?
Hey, yes, magnets, all that stuff's pretty
You get the
helpful
picture.
for
There you go.
EVs, all those kind of things.
EVs, yep, that's all of it. So he didn't like that this, again, she's using this as a bargaining chip with the president to get what was 57% tariffs down. It backfired. Now China has a 157% tariff starting November the 1st, plus these other controls and things. And like I said, I would be, here's my personal opinion, Jay. I would be shocked, as I was joking with you earlier, but you know me, you ready to be in between the lines. I would be shocked if he doesn't increase that or create some other type of retaliation before November 1st, right? November 1st, an eternity for him. So don't be surprised again if do you agree with me on that? You didn't comment. I was rattling when you
No, it came, not it's out of left field, because clearly China was doing things that sparked the incendiary reaction, but it seemed very aggressive, right?
On China's part or our part?
Our part, as far as like the tone and narrative. And, again, we've made comments about licensing things and such with NVIDIA and chips, but it seemed a very big reaction, even in his tone, right? More so than I, would say, hey, if this doesn't change, et cetera. But this was like 100% for sure. I'm not speaking for any other countries other than the US. So clearly there's been some conversation on the back end as far as others, right? But it seemed like this was building for a while with this response.
Yeah. Absolutely. I'm glad you brought up NVIDIA. Let's hit that one, then we're going to go back to the news. $9.41 loss today, 4.89% decline to 183.16, down another 77 cents in the after hours to 182.32. Okay. Again, rare earth minerals used in everything. China controls 70%. That's the gist. We're now, going to tariff them 157%, as I said. But also said before we went to break, there's other things that we're going to get to that also impacting the market, i.e. the 10th day of the government being shut down. People are getting a little exhausted. You and I said that on Wednesday. People are getting a little exhausted. You're hearing some military woman, C-SPAN had Mike Johnson, the speaker, on yesterday, and some woman called in and just bashed him, started bawling and said, because of you and the other Republicans not opening the government, and she did throw in the Democrats from what I understand. She goes, I've got 2 kids, special needs kids that need their medicine. My husband's in the military. We're paycheck to paycheck, and my kids may die if they don't get their medicine that I now can't afford because my husband's not going to get a paycheck. So those are the human stories that we're starting to hear. Johnson was very abrupt and basically saying, not my problem, it's the Democrats' problem, right? And that's kind of where this whole mess in Washington sits at this point.
And the tough part with it, right, is like an ugly game of tennis. The conservatives get to say it's the Democrats' fault this time, right? But last time it was the Republicans' fault. Like, the whole thing is both of these morons' faults, right? And it's just a matter of no one wants to fix it. They just want to use it as a bargaining chip, a political lightning rod of some kind. And like, that's the part that drives me the most crazy, is that I promise you, if when it's all Democrats at some point or whatever we elect next, they'll be pointing at somebody else saying it's their. It's just frustrates me to no end. I feel bad for that person, but it tends to work well for the political lens. But overall, it's just a stupid situation that we got to figure out longer term, and that's part of the whole debasement thing that's going around, right? People talking about, why is gold acting so well despite the fact currencies are moving the way they are? Why are cryptos acting so well? And it plays into that narrative of fiscal lack of discipline, both here and overseas, and people moving away from the currency of old, right? It just sort of plays into that quite well. And this exactly is it. That's why they got down, US debt got downgraded, 6-8 months ago. And we all freaked out about, like, this continues to play, and we got to figure out to, play for real and stop playing this game every single month.
And playing with people's lives. That's
the 100%.
Playing with people's lives. Or you're playing with people's lives when it comes to this. And like you and I criticize every time there's one of these debt ceiling discussions, and you've coined the phrase, they just keep kicking the can down the road.
Terrible.
They want to just kick the can down the road to mid-November. They can't even get that done, right? Just so people can start getting some paychecks. Well, again, whole nother subject. Our job today is to enlighten you on what's happened in the market today. Let's see. I think we covered the main points of what happened. The news is kind of light from the administration in regards to specifically how many people now, we still haven't heard the threat from the president come true, what he said a couple of days ago, which is he's also going to, speaking of the Democrats, going to use this time period of the government being shut down to permanently get rid of, we don't know the number, could be thousands, hundreds of thousands, who knows, of government workers that work for Democratic, in his mind, Democratic type of programs. So I think that could be another nail in the coffin if and when that happens. That was one of the threats that market really didn't pay a lot of attention to this week, but it's still looming out there. And especially now, I think what you're going to see with him, Jay, is I think you're going to see a very, very mad and angry president, more so than he even was, because now he, I hate to say this, folks, but now he looks like he has egg on his face that China got the best of him. That's why he slapped this massive tariff, just, off the cuff, basically. Now he's going to seek out retaliation against them. And I think now this is going to anger him, in my opinion, to do even more damage against the Democrats. I think if he, maybe in his mind before this whole situation with China, let's just do hypothetical. Let's say he maybe had a, 60% probability, 70, 80% probability that he was going to come to some agreement with the Democrats to get the country, because he's under severe pressure also.
Yeah,
right?
for sure.
I think now, let's say it was 70%, right? I would say now, I bet that drops to 40 or 50% because he's so angry. So now he's angry at China, and now he's really going to be even more angry at the Democrats, because right now he's getting backed into the corner, right? He's getting backed into the corner on one of the most important aspects of our economy, the rare earth. She got one up on him on that one. And now the Democrats are just not budging. Schumer and all them, they're laughing at him right now. And so when he gets this way, he's backed into the corner. Don't be surprised what he does. So I think it's going to be a really interesting weekend, and see if he comes out with more retaliation in some form or fashion.
Yeah, I unfortunately agree with you. And especially, like I said, the bond market being closed on Monday, we lack some of a
The big kids.
stability factor. Right. Big boys
We
and
lack the
girls.
adults.
Right. 100%. Yeah.
Yeah.
Well said. Well said.
It's your line. One of your many, like you said, acronyms or things. All right, we're going to come back and wrap it up with some advice for you, what you think need to be thinking about at this point. Let's wrap it up with Kristen Snow right now, Traffic Center. Hello, Kristen. Welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. All right, I'm going to tell you what we did today. I want to leave you on a positive note. Tough day today. Bottom line, we've given you all the reasons behind it. Jay, let's peer into next week. We have this little thing starting called earnings season next week for the third quarter.
Yeah. Decent amount. We get banks, right? JP Morgan will be out on Tuesday. Johnson & Johnson, Wells Fargo, Citigroup, Goldman Sachs, BlackRock, companies you may have heard of. They will be out before the open on Tuesday. We've got Bank of America, Progressive, Morgan Stanley, all before the open on Wednesday. Post the close, United Airlines. We saw Delta earlier this week. Sounds like their first class passengers were keeping things busy, but a little deceleration overall. We'll get Travelers, U.S. Bank Corp, Charles Schwab, Mellon, all before the open on Thursday. And what do we got? Anything good on Friday? Not much to speak of. More banks, American Express, Schlumberger. American Express will give us a read through on how the affluent consumer is doing, even though you have seen a millennial shift towards American Express, which I've seen on last couple of calls from them, State Street, et cetera. So all banks next week. It's no longer Alcoa that kicks things off. It's JP Morgan Chase.
And I think an interesting point too is Tuesday they kick off, right? Normally it seems to be on a Friday. So, and this could, and by the way, folks, I'm happy that it's going to be on Tuesday because this could be our savior. This could calm things down. This could be a counteraction to the actions that we talked about today. If you start to get some blowout earnings numbers from these banks, but again, the opposite if they miss, which I don't think they're going to. I think everybody overall is going to have a pretty good quarter. So
I would
I'm
expect.
not worried about the earnings. Yeah. By the way, it was announced today with the government shutdown, again, day 10, and not getting economic reports, which is, when you're sitting in our seats, is so bizarre. Especially when I do the stock updates in the morning. It's like, man, oh man, I missed being able to talk about this report or that one. But the Bureau of Labor Statistics, which creates the CPI report on top of our non-farm payroll numbers, announced today, I told you yesterday on the show, they're bringing their employees back. Why? Because they announced today that October 24th, we're going to get the read on CPI, measure of inflation for the month of September. So don't know how they're getting them back or whatever, but at least we'll get one government report as it sits right now until the government gets open. All right, finalize things. What do you need to be doing right now? Look at the beta of the portfolio. Look at your asset allocation. Do an internal risk tolerance check with yourself. Can you handle volatility? Can you and your spouse handle volatility? If not, don't hesitate to take some corrective action. Things are going to be choppy, but as quickly as they fell today, they can rebound. Who knows? We can come in on Monday and President Xi and Trump are, shaking hands again like we've seen in the past. Right now, just a lot of nervousness. You need to manage accordingly. Any points on your side, Jay?
No, I think it's spot on. If you feel like your portfolio is moving more than you want it to, there's no shame in taking a little bit of profit here at all-time highs. So it's
Absolutely.
Always thinking about that.
You betcha. All righty, folks. God bless. Have a great weekend. Those of you that have 3 days, we'll miss you on Monday, but you know what? You can always pick up our podcast. Give us a call in the office if you're not happy with what your portfolio is doing. 75800-1801 or online at SanchezGaunt@GAUNT.com. Have a great weekend, Jake. God bless everybody. We'll see you on Monday.